afternoon. Welcome to the weekly Livestock Market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Happy Friday before the government shutdown. I mean, potential government shutdown. There's a lot up in the air and a lot still happening. So hopefully Sunday night we have some sort of deal.
That's the hope, right? If not, the information we have available next week will certainly look different than what we get to talk about this week.
You get to be a true economist next week if we don't have government data to break down and analyze. And there's a lot for you to pontificate.
No, nobody's going to know whether I'm right or wrong, however, so it makes it easier in some ways.
At least not in the near term. All right, we're going to talk cold storage numbers today. We'll also talk a little quarterly hogs and pigs and some restaurant performance. But to recap and to kick us off, let's recap what happened this week in a very, very not so great week on the markets.
Yeah, that's right. I don't know if I have any positive news to share on the price front, regardless of what we want to talk about today. But starting on the cattle side, live fed cattle down $1 this week. We're going to also call those feeder cattle markets anywhere from steady to $3 lower this week. On the future side, the October live cattle futures contract was down $2.80, and the October feeder cattle contract was down nearly $6.90 this week, Megan. Choice box beef prices lost $1.60 on the week. Turning to the hog side, barrows and gilts cash prices this week were down $1.30. October lean hog futures contract was also down $1.30 this week, but as you look at those markets today, they've been down hard in response to what was more bearish hogs and pigs report yesterday. Pork cutout value also lost nearly $1.80. I just remind us now that pork cutout value relative to a year ago is now down $1.80. So we're on the wrong side of that pork cutout value.
I'm not sure we've had a week that's been this negative in quite some times in terms of what prices have done.
I was going to say, I can't remember when we've had a trifecta as we did in terms of what we covered this week of lower prices. And it's been tough in markets generally when you look at where stock market's been this week. So it's been a pretty tough week across the board. I don't want 1 week to create a trend, but concerned about just where the economy goes with all the uncertainty that we face of higher interest rates, government shutdown, workers on strike. All those things, I think, are certainly having their impact on markets.
And we'll talk a little bit more about that shutdown and potentially what that means on the ag side of things towards the end of our conversation. Let's take a look at slaughter numbers, Scott, and start with cattle and then we'll talk a little bit about how they're stacking up year over year.
Yeah, so cattle slaughter, according to USDA, for the week ending September 30th, a run of 612,000 head of cattle. That is 13,000 head less than we did last week and 55,000 head less than we did a year ago. Yet on the hog side, a big run of hogs, 2.604 million head of hogs, according to USDA for this week. That's 67,000 head more than we did a week ago and 119,000 more than we did last year.
When we're taking a look at those numbers year over year, that we're going in different directions, definitely.
It's funny you use this. That was going to be my description of the move that we're seeing. So cattle slaughter year to date down 4.4%, and hog slaughter up 1.4% year to date.
Taking a look at cold storage, always my favorite when it doesn't come out in the same week as livestock slaughter and cattle and feed numbers. But as we take a look at those August numbers, how are our cold storage stocks stacking up?
Yeah, so if you look at the beef side first here for the end of August, cold storage stocks of beef for 422 million pounds. That's down nearly 18% relative to where we were a year ago now. Just to remind us, we're back in June, we were down almost 21%. So we're slowly creeping back towards closer to year ago levels, although still below. On the pork side, we've got 471 million pounds of pork in storage at the end of August. That's down 13.2% relative to a year ago. And in fact, we're continuing this trend on the pork side of what back in March, well, I should say back in January, was 19.5% above year ago levels to now 13.2% below year ago levels. That has a lot to do with hams. Hams down 11.4%, boneless hams in particular down 11.4% in August of this year relative to a year ago. Whereas bellies up 3.3. So we were seeing double digit belly increases. Those have subsided, now only up 3.3%. So a little bit of a mixed bag when you look at some of those components.
When we think about the story that it tells, we talk about, taking a look at some of those interior numbers, more finite numbers like in the livestock slaughter. When we look at the cold storage, what story is this telling us about the demand situation and how things are still moving?
Yeah, so you ask a good question. I'm always hesitant to put too much emphasis on cold storage. We just produce so much product during the month that looking only at ending stocks tells just a part of the story that we're facing. However, having said that, I think you're still talking about beef ending stocks that are tighter than a year ago. In fact, those stocks are 10% below where they were in 2019, so pre-COVID levels. Just to remind us, we're tight on stocks. On the pork side, I think the same things at play here. So what was ample supplies of pork that I think really weighed on markets in the first part of 2023 have flipped and went below year ago levels. And when you look at those August 23 numbers relative to August 2019, we're down 22%, Meghan. So I think that's important that we're not backing up bunches of beef and pork, it would appear, looking at what we have in inventory right now.
Quarterly Hogs and Pigs report, probably the biggest report coming out this week. And really, when you get into the nitty gritty of that report, there's a couple of different stories coming out of it. So let's start first and take a look at that kept for breeding number and highlight it.
Yeah, so kept for breeding came in at 98.8% a year ago. That frankly wasn't all that different than the pre-report midpoint. So the pre-report midpoint at 98.6, it just reminds me to say we expected a cut in breeding inventory, and we got that cut in the report. It's interesting to look a little bit at the numbers by state here, and I say that because we all saw the stories of Smithfield closing some facilities in northern Missouri. So Missouri was down 30,000 head of breeding inventory. That wasn't the largest decline. Iowa and Oklahoma each were down 50,000 head. While on the other side, Illinois up 80,000 head. So a little bit of mixed bag in terms of those state by state numbers. But according to the report, breeding inventory change was again very near pre-report estimates and down 98.8.
And then when we take a look at kept for marketing, that story is also interesting on its own.
So it is. We came in at 100.4% of a year ago for kept for marketing. That's outside of the upper end of the pre-report range, and a percentage point above the average pre-report estimate. When you look at some of the individual numbers, hogs less than 50 pounds were 100.1% of a year ago. Pre-report midpoint was 98.5. You can look at every single weight category, and we're above the midpoint of those pre-report estimates. I think it's important to talk about some of the revisions when we talk about that market hog inventory for a minute. And I look at it this way. So pig crop for last Dece through February was increased by 480,000 head. and the March through May pig crop was increased by 60,000 head. I think that had a lot to do with some of the additional inventory that we saw in this report.
When you look at this, looking at those two numbers then together, or those two elements together, I would assume that it tells a story, or we think that it's really difficult to contract. And when we're so efficient and so productive in an industry, even when we're not necessarily seeing profits.
Yeah, that's right. So we got, and I think this is so large capital outlays and facilities, you're going to run them at 100%, even if, until they're worn out at least. And I often say, even if that one facility were to somehow no longer be solvent, those assets are probably sold and somebody produces hogs in those facilities. So when you build, given the cost of new facilities, not much of a choice but to keep producing. So when we have negative returns, as we've had for, maybe this is the worst we've seen in decades, I just say it's very hard to get us to turn down. Now, productivity has jumped out at us. I'm not sure I'm ready to know what to make of pigs per litter yet, but if you remember, we've been talking about some recovery in pigs per litter, and we got more of that as we now look at the latest quarterly data. So even though we lost breeding inventory, you look at 11.61 pigs per litter in that last quarter. That has I think should have our attention, because we're more than offsetting the cut in breeding inventory by that productivity gain. So it wasn't very positive report when you get right down to it. And I think futures markets certainly reacted as we digested all the information in yesterday's report.
I'm pretty sure the futures market digested the information and spit it back out very unhappily today. It was a very, very rough end to the week for hog futures and cattle futures really as well.
Yes. So I think it's interesting to think long term here for a minute. I always have said, anytime we've been talking about periods of very tough economic returns, you're taking out the highest cost producers probably in those periods of downturns. And when I put my hands together, I think about the old bell curve of distribution, high cost guys sitting down here at the end of that bell curve. Well, I think the bell curve's done this. It's slowly become much more condensed as over time we keep washing out the highest cost producers. It just makes it, again, that much harder to get adjustment to happen. I don't like the story that we're talking about here, but I think it's important from a risk management standpoint still, because I will say all the time, it's these periods that are going to matter the most. And once we get profitability, we'll get quick expansion probably again. Some will need to heal from the tough times we have right now, but again, it doesn't take much for other money to decide, hey, there's a good return in the hog business, maybe I'm going to go get in. And so then when we turn down, we just have to wait for demand to catch up. And demand has, with more concern about just where consumers are at on spending, I think has been not as positive as it was in 2021 and 2022. So we have longer to wait and potentially more financial pressure continuing on the hog side of the equation.
Scott, I'd like to say we're going to end on a positive note, but we're not. So let's take a look at Restaurant Performance Index and talk a little bit about the demand side of things.
Yes, I'm going to start with the positives just so we can have a positive for a second. So the Restaurant Performance Index has both the current situation and expectations components to it. Expectations came in at 101.5 for August, which is down just 0.1 from July. So seems like we still have positive expectations about the next 6 months. unfortunately, when you look at the current situation index, it was down a half a point. And the one that jumps out to me is customer traffic, down almost 2 points from July to August. It made the overall index go from 101.4 to 100.5, so a 0.8% decline in August. Again, we had been moving in a more positive direction the last couple of months, and now we've kind of stumbled. I kind of wonder if that's beginning to show us some of the consumer concerns about how much spending they have available for food.
Next week's reports, monthly trade data, jobs report that comes with a asterisk if there is no government shutdown. So before I let you go today, I think it's probably a good idea to talk about how we just don't know. There could be a miracle. I would say an act of Congress. It would have to be an act of Congress to get us to a point where we don't have a government shutdown. But we really don't know what's going to be available to us in terms of market data, in terms of information. How does that kind of play out in what we think about in the next potential 30 days, depending on how long this lasts?
Yeah, so yes, I think the short answer is nobody knows. So I want to be a little careful about suggesting I know exactly how this plays out. Number one, I don't like coming off of this week with next week being the potential shutdown, because we've had a pretty negative week. And so if we're going to lose information, what do markets trade on? And I don't think we know exactly what information we're going to lose. I've heard all kinds of different ideas, to some going as far as maybe all USDA sites go down. One that I think is out there is that if you were a cattle producer and wanted to use LRP, you may not have the opportunity to use LRP while we're in shutdown. This is going to come down to what jobs are deemed essential in terms of information. And I'm not ready to say too much, except that we're going to have a lot less information if we shut down than we've had for a while. And we can remember the times where without government information, markets searched for what was really happening. And we may be in that period again with this, if this shutdown comes true over the weekend.
I think I've heard the secretary say twice this week, probably 50,000 USDA employees are going to be furloughed. And so there is a lot of implications. We will do the best we can to keep you informed with the information we know, and be able to provide the information that we can when we chat next Friday, but throughout news and market programs at brownfieldagnews.com and on your local radio station. So that's what we can tell you. Hopefully we don't have this conversation, but it sure is looking more and more like that's where we're headed. And we've done it before.
And so the length of time here matters as well. So maybe we shut down, maybe it's for a short period of time, and we find a way to get beyond. The longer it drags out, the more uncertainty I think we add to the markets. That's at least been our historical experience. So we'll have to wait and see how this one exactly plays out. I will say the other piece of this is just to the demand side of the equation. You and I often talk about what's consumer demand like. I don't see a positive here. If you're gonna have a lot of government employees furloughed on top of strikes in the automobile industry, et cetera, I do have a little concern about what this all does to demand for beef and pork as we move ahead as well.
Scott, we will talk to you next Friday regardless. Hopefully we've got data to digest. Otherwise, you can bring all your magic tricks.
We will pull the rabbit out of the hat, I guess, under that scenario.
Most definitely. Have a great weekend. We'll talk to you next Friday.
Sounds good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments, and for market updates every day in the afternoon, check out John